In this video, I'll break down 4 hidden gems in 4 minutes and stay to the end. The last one is up over 245%. Before I get started, if you're new to investing or want to get better at investing, you're in the right place. Here at Tykr, we're all about clear, confident investing. All right, let's dive in. I'll use Tykr for all 4. So the first one is Common Vault. Ticker symbol CVLT. The 3 indicators I look at are the summary, score, and margin of safety. So right away, we can see the summary is on sale. Only about 15% of stocks actually make it to on sale, so that's pretty hard to do. Then you have the score, 61 out of 100. The higher the score, the safer the investment. And then you have the margin of safety. Margin of safety is 80%. The higher the margin of safety, the higher potential returns you can make. So all 3 looking really good. And then if you want a little more confidence to see if this is a buy, this stock here is 83. If you can get close to 80 or higher, that is a strong stock. Now, if you scroll down below, the 5-year returns are 220%. For comparison purposes, the S&P 500 over 5 years is about 80%. So this is definitely beating the market by a long shot. And the last thing I'll check out is the earnings calendar. What I like to see is stocks consistently beating those earnings reports. The reason is large institutions like to see stocks beating those earnings reports quarter over quarter. Here we go. You can see primarily green. They're beating those estimates. Last miss they had was just 8% back in January of 2023. It's a really good track record. 3 reasons I like this stock. Number 1, that 4M is over 80. It's at 83. Number 2, this is cybersecurity. Cybersecurity is definitely a need to have, not a want to have. And number 3, some of their top clients include Adidas, Sony, Panasonic, and Merck. Now, if you were to buy this stock, the question is, when would you sell it? I would sell it with these 3 indicators. All 3 have to check. Number 1, it changes from on sale to watch or overpriced. Number 2, that 4M score drops to 59 or lower. And number 3, you're positive. As Warren Buffett teaches us, Rule 1 investing, Rule 1, don't lose money. Rule 2, don't forget Rule 1. Next up, this stock is InterDigital, ticker symbol IDCC. What they do is create technology that enhances wireless communication in the US, China, South Korea, Japan, Taiwan, and Europe. We'll cruise through these ratings pretty quick. You can see the stock is on sale. Score is 67 out of 100. Margin of safety, 80%. And this stock also has a 4M of 83. When you scroll down, you can see it has returned 146% over 5 years compared to the S&P 500, which is about 80%. And then if you jump to the earnings calendar, you can see this stock has consistently beat those earnings reports. In fact, the last one was 1,000%. That's incredible. But then I think the last miss was back in May of 2022. Nice, consistent track record. There are 3 reasons I like this stock. Number 1, that 4M is 83. Number 2, it's wireless communication. We don't have wired communication anymore. Everything's wireless. So how do we make wireless communication faster? Well, a company like this helps with exactly that. And number 3, they have a global footprint. Don't just invest in stocks in your country. Try to invest in stocks that have a global footprint, or at least a footprint in multiple countries. The reason is you can scale revenue and then optimize profits from there, which means the share price increases and you make money. Now, if you bought this stock, the question is when you sell it. Well, same 3 criteria again. This stock changes from on sale to watch or overpriced. Step 2, that 4M score drops to 59 or lower. And step 3, Rule 1, only sell for profit. The 3rd stock on our list, this might be a little more recognizable to those of you that live in the US. This is H&R Block, ticker symbol HRB. So they not only make money by doing taxes, but they also have other products such as credit cards that charge a interest rate, creating that payment tech revenue. I've talked about this in other videos. Most scalable business model on the planet would be advertising tech. Second to that would be like payment tech, where you come in between the buyer and seller and you collect transaction fees. And the 3rd most scalable business model is SaaS. This business here, they kind of structure their service business like a SaaS, so creating a reoccurring monthly payment, and then they have the payment tech bolted on. That is a smart business model, right? Let's dive in. So this stock is on sale. Score 56 out of 100. Still above that 50 we're looking for. Margin of safety also 80%. In the middle, the 4M score is not 80, but it's pretty close. 72 is still pretty good. Let's jump to that earnings calendar. You can see here they've consistently beat those earnings reports quarter over quarter. That's exactly what we're looking for. And if you scroll down, this stock has returned 161% over 5 years, again, against the S&P 500, which is about 80%. There are 4 reasons I like this stock. Number 1, that 4M score is a 72. Even though it's not 80, that's still pretty good. Then next up, taxes. Taxes are a necessity. It's not a want to have, it's a need to have. Anytime you can create a business that kind of bolts onto something that's mandatory, you think about homeowners insurance or car insurance. In most states, it's mandated. Most states in the US, taxes, you have to pay your taxes. In this case, H&R is playing on that necessity. Number 3, the services business is structured like a SaaS, so it's creating those reoccurring, those monthly payments. And number 4, it also has fee-based revenue bolted on top. Now, if you bought this stock, the question is when you sell it, same thing as the other 2. When it changes from on sale to watch or overpriced, that 4M score drops to 59 or lower, and of course, you're profitable. Moving on to number 4, this is very much a hidden gem. Boring business. This is Dorian LPG, ticker symbol LPG. What they do is they have large ships. I'll actually show you their site right now. Large ships that are transporting petroleum around the world. All right, this stock is on sale. Score is, check this out, 95 out of 100. Very strong financials. Margin of safety of 80%, and look at this, in the middle, 90 on that 4M. That is outstanding. And if you scroll down, this stock is up 225%. When I looked at this stock a few days ago, it was up 245%. Went down a little bit, but rest assured, this is still a market beater. All right, let's go to that earnings calendar. We can see this stock has consistently beat those earnings estimates. Last miss was August of 2023. Again, when stocks continuously beat those earnings estimates, that's what causes those large institutions to increase confidence and keep buying more shares. There are 2 reasons I like this stock. Number 1, getting above 80 in that 4M score is very difficult. In this case, this stock is 90. Number 2, they have 25 large ships. To have 1 ship is, you can make a lot of money. This company has 25 large ships. And then if you buy the stock, the question is when you sell it, same thing as the other stocks. When the stock changes from on sale to watch or overpriced, that 4M score drops to 59 or lower, and you're profitable. There you go, 4 hidden gems in 4 minutes. I'd love to hear what you guys have to say, and if there are any stocks you want me to take a look at, please leave a comment below. And if you're interested in buying and selling stocks with confidence, I invite you to join Tykr for free. All right, we'll see you in the next video. Bye for now.